Ignore value-added tax. We're going to do tax a little bit later on. Off-road is a company situated in Port Elizabeth, what's the new name, Quebec, South Africa, which has a 30 June year end. It imports Kurama 4x4 buckets from Germany, and its main customers are the police, farmers, and tourism companies, since these vehicles are low on fuel consumption, relatively economically priced, and built for tough off-road conditions. I apologize for my dog who's not knowing when to bark and when not, but you will hear my dogs many times in these videos because I've got 3 of them and they don't know when to shut up. Okay, let's have a look. The following transactions occurred during the financial year ended 30 June 2016. So very important, that is the financial year end. On 25 February, the South African Police Service ordered a fleet of bakkies from Off-Road. On the same date, Off-Road placed a 5 million rand non-cancelable order to their supplier in Germany. Off-Road does business with the SAPS on a regular basis and has a good business relationship with them. Good. Now what happens on 31 March? On 31 March, Off-Road had paid a 50% non-refundable deposit to the supplier. The remainder of the amount is due for payment 14 days after the date when Off-Road would take custody of the fleet in the Port Elizabeth harbour. On 21 May, the fleet of bakkies were loaded onto a ship in Germany. The supplier in Germany, and this is important, insured the fleet of bakkies until it reached the Port Elizabeth harbour. On the 30th of June, the fleet of bakkies arrived at the Port Elizabeth harbour, at which time it was collected by Off-Road. Now the question asks you, discuss in terms of the conceptual framework, at which date Off-Road Limited should recognise the fleet of vehicles as assets in the statement of financial position. Now let's quickly run through the process that happened. On 25 February, Off-Road placed an order for the bakkies from the German supplier. Is there any transaction that we have to record in the accounting records at that stage? No, there isn't. Nothing has happened except that we've placed an order. On 31 March, Off-Road paid a 50% non-refundable deposit. Now there's an accounting transaction that took place, cash flow took place, and we have to record that 50% non-refundable deposit. On 21 May, the fleet of bakkies were loaded onto the ship in Germany. Now what is important about this sentence is that the supplier assumed the risk over the bakkies until it reached the Port Elizabeth harbour. So if something goes wrong with the bakkies, whose loss is it going to be? Well, it's going to be the German supplier's loss until such a date that that ship reaches the harbour. So that means that they are controlling the assets, they are bearing the risk of the assets until those assets are going to arrive at the harbour as at 30 June. But no accounting entry will take place on the 21st of May. Now on the 30th of June, the ship arrives at the harbour and then it was collected by Off-Road. So when did the risks of ownership actually was transferred to the Off-Road? It was transferred at the date that it arrived at the harbour and was collected. So on the 30th of June. Now, we have now told each other what the answer is, but obviously that cannot count at marks. So let's see how you're going to go about in answering this question. It's all about an asset and the conceptual framework. So the first thing that we want to do is to go and have a look, what is the definition of an asset? Now, an asset is a present economic resource. An economic resource is a right that has the potential to produce economic benefits. So once the company gains ownership of the bakkies, at that stage it will become an economic resource for the entity. Because at that stage, and that is the stage when they collected the bakkies from the harbour, they will decide what will happen to the bakkies. They carry the risk if something goes wrong with the bakkies now. So it is going to be their loss, so they will have to take care of those bakkies from the moment that they've actually collected that bakkie in the harbour. Now, the potential to produce economic benefits, that is quite easy because they already have a contract with the SABTD. So that means that obviously when they're going to give or sell these bakkies to the SAPS, they are going to receive money for that. So that's going to generate income and future economic benefits. The second criteria is it controlled by the entity? Now, obviously, control only takes place at the date that they actually go and collect the bakkies from the harbour. It is at that stage that the risks and rewards of ownership was transferred to off-road. Up to the date that the bakkies is on the water and is not in the PE harbour, the supplier carries the risks and rewards, so they are in control of those bakkies. But at the moment that it reaches the harbour and off-road collected the bakkies, the risks was transferred to off-road. So that is the date when they assumed control over the bakkies. And the past event, well, the past event can be two things. One being that they have actually ordered the bakkies, and the second part of the event was when they collected the bakkies at 30 June at the PE harbour. Now that is the definition criteria. So look at the bakkies, it actually adheres to that criteria, to that one, and to that one, all three of them only on the 30th of June. Then we must go and check for the recognition criteria. And the recognition criteria has two things that you have to check for. One being relevance, one being faithful presentation. Now, relevance is all about the uncertainty of the existence of the bakkies. And guys, there's no uncertainty. You can have a look with your eyes and you can see all the bakkies standing there, so there's no uncertainty. The second uncertainty factor of relevance is that there mustn't be any uncertainty about the flow of future economic benefits. And there is no uncertainty because they have already, as a matter of fact, entered into a contract with SAPS and they're going to sell all these bakkies that they have ordered from Germany to the SAPS. So there is no uncertainty about that either. Faithful representation is all about measurement uncertainty. Is there any measurement uncertainty? And the answer again is no. We know exactly, we have an invoice which stipulates that the purchase price of these bakkies is going to be 5 million rand. So there's no uncertainty whatsoever about the value that I have to recognize this asset in my books. It's the 5 million rand. It is very clear, out of the question. There it is. Plus the 5 million non-cancelable order. Good. So what is the conclusion? The conclusion is then that it is clear that the date on which the asset can be recognized is 30 June 2016. The second portion of the question says, prepare the journal entries that should be processed on each of the following dates. And then they give me all these dates. On the 25th of February, no entry. They only place the order then, there's no accounting entry. On the 31st of March, they paid this 50% deposit, so 50% of 5 million equals 2.5 million. No entry on the 25th. On the 31st of March, I'm going to debit a deposit or prepayment account of 2.5 million and I'm going to credit bank 2.5 million. Now listen carefully. If I ask you to write a journal entry from now on until the end of your studies, if you're asked to do a general journal entry on a line-by-line basis, you have to put the statement indication. So that prepayment or that deposit or that prepaid expense, whatever you want to call it, can call it either one of the three, that is a statement of financial position account. So that is a debit in the statement of financial position, i.e. an asset as at 31 March, 2.5 million rand, credit bank 2.5 million rand. On the 21st of May, they load these bakkies on the ship. So there's no accounting entry there. And then on the 30th of June, those buckets arrived at the PE Harbour. The 21 May, no entry, 30th of June. That is where they're going to accept those buckets. Remember, what is the buckets? It is the trading inventory. So I'm going to debit inventory, statement of financial position, 5 million rand. I'm going to credit my prepayment. I'm going to take that out of the books, 2.5 million rand, and then I still owe the supplier 2.5 million, so I'm going to credit trade payables or creditors with the remaining 2.5 million that I have to pay them. Good, and then the last part of the question, they want you to prepare the extract of the statement of financial position of Off-Road Limited as at 30 June 2016 in as much detail as the information allows. So obviously that would be then before the SAPD is going to take ownership of the bucket, so before the sales transaction will be concluded. Accounting policy notes and comparative figures are not required. So, look carefully the layout of the statement. Off-Road Limited, statement of financial position as at 30 June 2016. So the name of the name of the entity is appearing on the first line item. Then on the second line item that you have to write is statement of financial position as at 30 June 2016. And then you, on top of the amount column, you are going to write the year 2016 and the denomination of the currency, rand. Guys, you get marks for this. I'm going to say current assets, inventory, 5 million rand. Current liabilities, trade payables, 2.5 million. They tell you here also ignore the line item for cash and cash equivalents is not required. So it's only about the assets and the liability that you've actually created in this journal here. Here's the inventory of 5 million and there is the remaining amount that you owe the supplier of 2.5 million. So current assets inventory 5 million, current liabilities trade payables or creditors 2.5 million.